Our approach really is to be sharpshooters. We focus on markets that we think have great potential for growth, lots of drivers of demand, and that we think we can really penetrate and really scale the business in.
Joining me today is Michael Gamzon, President and CEO of INDUS Realty Trust. Can you talk about the strategy behind INDUS's expansion from just 5 markets at the start of 2021 to 7 by early next year?
Our approach really is to be sharpshooters. We focus on markets that we think have great potential for growth, lots of drivers of demand, and that we think we can really penetrate and really scale the business in. And so today, as you mentioned, we're in several. We're going to add a couple more, focused really on the Southeast, where we're seeing really strong population trends. And our goal is really to be in 8 to 10 over time, and to have at least 1 million square feet, and hopefully multiples of that in each of those markets. But it's really to dig deep and penetrate into all those markets, have a diversified portfolio, but in a tight group of markets that we know really well and that we think are going to be really strongly performing.
What runway for growth do you see in both acquisitions and new development?
Yeah, so we see really a great runway in both. You know, we currently today have a little over 2 million square foot pipeline of acquisitions and developments, and we're going to continue to grow and add to that. You know, we think there's opportunities for both. Our history has been a lot more on the development side. We've created a lot of value doing that, but we're really going to look at both acquisitions and developments and continue to grow the portfolio doing both. And what we look at is really a range. We do both, you know, some core acquisitions, but more focus on value-add acquisitions, purchase of buildings under development that other developers are doing and buying them upon their completion and leasing them up, as well as doing our own development. So we're really able to look across the spectrum and be opportunistic at the specific individual opportunities that we see, as well as sometimes can decide we want to do more development based on where we see the market, or do more of existing buildings.
How much potential for rent acceleration do you see across the portfolio?
Yeah, we really see today the fundamentals remain strong for continued strong rent growth, and for a couple of reasons. So with our own portfolio, one, we have average escalations in our leases that are currently around 3% for the portfolio, but recent deals have really been in that 3.5% to 4% range. We also have what we've talked about as a mark-to-market in the portfolio of 23% roughly as of the end of the first quarter. So as leases roll over, we're going to be able to realize some pretty significant rent growth there.
And as you meet with investors, what are 3 top reasons you cite to invest in INDUS Realty?
Yeah, so I think the 3 are, one I'd say is growth. And I kind of break growth into 4 parts, and we touched on a bunch of them already. But one is the industry has tremendous tailwinds that's really driving growth in just supply chain optimization, supply chain efficiencies. You know, even with a little bit of a pause recently, the continued share growth of Amazon. 2 is that internal growth I talked about with our mark-to-market rent and annual escalations. 3 is external growth, which are the acquisitions and developments we talked about earlier. And lastly, I'd say is that we're still a relatively small-sized company in the space, so that all these individual little transactions really move the needle. So good for us to get outsized growth. The second key piece I'd say is we really have a strongly performing portfolio and really great markets. So currently, you know, we're markets seeing tremendous population growth, a tremendous economic growth. That's really driving demand. Our portfolio average age is only 12 years. We've developed a lot of it. We have really outstandingly great buildings and great locations. And so even though we're a small company, we really have that well put together portfolio that's going to perform well for the long term. And lastly, I think is that we really are well positioned and well capitalized. And what I mean by that is, one, that our portfolio is essentially fully leased. We don't have a lot of rent leases rolling in the next couple of years. And we have really strong tenants. That most of our tenants, nearly 3/4, over $500 million in revenue, or publicly traded. So we really have a strong base to build on, and then we have that pipeline of growth, but importantly, that pipeline's fully funded. We have cash on our balance sheet and a term loan we put in place that will fund that entire pipeline, so we're fully financed for our whole growth that we have before us, and still have room to do incremental beyond that.